Hello traders, Gary Wagner here, just about 11:45 in Honolulu, 5:45 in New York. It is Friday. Happy Aloha Friday, as we say on the islands, 24th day of March, 2017, and this is the Daily Report for Gold and Silver, our weekend review. And traders, what a week we have seen in this market, with incredible gyrations capping it off as traders and market participants awaited the initiation of a vote on the new health care bill proposed by Ryan, which on an 11th hour move by President Trump was in fact canceled. That really moved the market as minute by minute changes occurred. At one point, U.S. equities were down, in terms of the Dow, well over 100 points. In the morning, they were up 50 points. Gold was trading higher throughout the day. We'll talk about all of these and the effects and what we can expect on Monday morning. But first, to some net changes. Gold did in fact close lower today, closing off about $4 on the day at $12.4330. It traded to a low of $12.40 and a high of $12.51. The 51 is really important. We'll talk about that resistance point in a second. That, of course, is based upon April futures. We are currently long gold, but we are long in the June contract at $12.37. That also closed lower, off $3.70 at $12.46. So still have about $9, $10 on that trade. Silver, on the other hand, actually eked a fairly sizable gain, closing up over a full percentage at $17.75, up about 18 cents on the day. Now, it was major gyrations that occurred in the Dow. As I said, up 50 points at one point, then down over 100. The Dow closed down about 59 points at 20,596. S&Ps also closed lower on the day, but the NASDAQ had some real resilience, actually closing up about 0.2% at 58.28. Now, the dollar index, which is so critically important as we watch that as it relates to gold, closed fractionally higher. We're going to give it an unchanged mark on the day. And then lastly, in terms of pricing structure, is crude oil, which had a small rebound at 48.14 on the day. Let's take a look at our first gold chart. So traders, to say that we had a bit of volatility this week would be an absolute understatement. Now, although we did close lower on the day, I want to start by looking at a broader picture, a broader scope of the market. And to that end, I've pulled up our weekly candlestick charts. And if you recall from last week's weekend review, we talked about a pattern that we had identified, which is a simple two candlestick pattern that is a bullish harami. That is this candle here as well as this candle here. You can see that in terms of the market, it had been coming down for 2 weeks. And then this particular candle, the candle last week, is to a Western trader called an inside trading candle. On a daily, it'd be an inside trading day. This be an inside trading week, in which the real body, meaning where the market opened on Monday and closed on Friday, is all within the range or the body of the prior candle. So you get your bullish harami. And then this week, what we can see is that we did in fact close higher on the week. And so now what we're looking at is a bullish harami confirmation. However, that has got to be put in with a major caveat. And the caveat is looking at the high that was achieved this week, roughly at 1252. And that's a key number because it's the first real level that we have been anticipating some potential resistance. We'll talk about that, of course, when we pull up our daily chart. But it did close well off of the high, closing about $4 lower today at 1243. And this, of course, is the April COMEX contract. And so traders, as I said, although we did close higher on the week, some concern, and I believe it at this point to be minor concern, is the fact that over the last couple of days, we did have the market move to a new high, especially yesterday, and approximately the same high today, but in both occasions we have the close or the real body of the daily activity, these being daily candlesticks, closing below a couple of key levels. You notice this line here as well as this line here at 1247. And so traders, to put those particular price points relative to today's move into some perspective, I really needed to compress the chart, because what you'll see is that we're using a short-term and a long-term fib retracement, and we are getting a harmonics. Harmonics simply meaning that we've got two different fib retracements all coming out with the same conclusion, meaning the same price point. The long-term fib retracement that we have is really looking at the lowest low that gold traded to ever since it fell from 1900, when the market hit 1047, and this being back in December of 2015. And it concludes at the high that was achieved last year, which comes in roughly at 1380. When we do that, we get different hash marks, but what's of key importance is a 38% retracement level, and that retracement level takes us to 1250. And traders, the second retracement that we are looking at that comes in at the same area is a 50% retracement, 1247, and that is derived from the top that was achieved at 1375 down to the low that was hit in the last part of last year, in December of last year, when the market traded to 1120. When we do that, we get a 50% retracement coming in roughly in the same area. And for that reason, we have all week labeled this area right here as our first area that we would look at for potential resistance, with one area just on top of it at 1265. And the 1265 is based upon this recent top, which is the highest high that gold is traded to this year. The next chart that I do want to look at on today's show is a simple daily chart, but this in Japanese average format, so we can get some indication of strength of trend. We talked about this throughout the week on our daily show, that we had some really decent body sizes in these candles here. The trend itself had fairly strong momentum behind it. That was the first thing. The second thing is that a couple of days ago, we moved above the 28-day simple moving average. That also indicating some strength in the market and good body size. But as you can see with today's candle, we have not gone red, but we do have a pivotal candle, that doji candle, which is certainly a sign to look at activity early in the week carefully, but not a indication that we need to act on our current long position. And traders, that is based on the fact that basis the June contract, which closed off $3.70 at 1246.40, we are still about $10 above our entry price at 1237. We get the same kind of pattern, this bullish harami. And so what we need to see is how the market reacts on Monday, because realize we had extreme volatility enter the market as there was a vote that was supposed to occur. As it came closer and closer, it was canceled, and that sent some extreme volatility across the board in the markets. And depending on what we see on Monday, my sense is that this is highly a fundamentally driven market right now. And depending on statements that come out this weekend and what actions are taken Monday, will determine the future direction of all of the markets, and gold specifically, if we see any breakdown right now and any real belief that there is not going to be a new health care bill enacted in terms of legislation, we could see equities really come under some pretty dramatic pressure. We could see safe haven assets, specifically gold, spike up tremendously. So my recommendation, obviously, for the weekend is to maintain our current long position, as well as maintaining our current stop. And so traders, lastly, I do want to take a look at the dollar index, because that has been under tremendous pressure over the last couple of trading weeks. But as we talked about over the last couple of daily shows, we see the real potential on a technical basis for support to come into the market. And I draw your attention to this particular price point just at or above 99, roughly 99.60. And we see a series of tops here. We also see a potential bottom here as well as a bottom here, all indicating that on a technical basis there is a historical reference or a reason to look for support in this area. The second thing is the fact that over the last 3 trading days, and this has been 3 strange trading days, but you can see these very small-bodied candles. Once again, these are those dojis, and dojis typically indicate consolidation in the market, and they typically appear at key pivot points in the market. We can see that here. The other noteworthy aspect of the way the market traded is we saw it hit this particular low at 99.50 on 2 occasions, once today and then once on Wednesday, both being the lows and both being supportive, having the market close just above that. Any kind of real dollar strength, of course, would put pressure on the gold market. But as I said, we really need to see what develops over the weekend going into next week and how this administration deal with passing some new legislation. If they come to a stalemate, if they're unable to do that, it really puts into question whether or not President Trump can really move forward with his campaign promises and, most importantly, convert those promises into new legislation that would achieve lower taxes, that would achieve different trade agreements that were more favorable, that would achieve a change in the healthcare program. So there's no doubt it's going to be an interesting week next week. Maintain your current long position, maintain your current stop. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for another daily update and review. Bye-bye.